Vinay, I think we are all set.
Perfect. Thanks a lot, Ganesh. Uh, Very good evening to all the founders. Uh, Thanks, Kapil, for joining in. Apurv, thanks a lot for facilitating this. To all the founders, as you're aware, we've been doing these AMA sessions with great leaders like Kapil to share the insights and help all of us in moving forward in our journey. Today with us, we have Kapil, who is a seasoned professional with more than 17 years of experience in technology, e-commerce, and supply chain. He's been leading Unicommerce for around 6 years now, and he's been successful in establishing the organization as India's largest e-commerce enablement SaaS platform. Uh, Kapil has been building a business with strong foundations and played a pivotal role in Unicommerce growth and profitable journey. Currently, I think he's been successful in getting it listed in National Stock Exchange and Bombay Stock Exchange. Uh, with that, once again, thanks a lot, Kapil, for joining us, and now I hope today's session is going to be really enlightening for all the founders here. Founders, please take full advantage of this session. It's very rare to have personalities like Kapil join us on these sessions. So please make use of the next 1 hour to the best. And thanks a lot, Kapil, and over to you.
Thank you, Vinay, for your kind words, and thanks to the broader T-Hub team for organizing this session. I think it's always a pleasure talking to fellow SaaS founders. It's always I've also been associated with forums like SaaS Movies. It's always been enriching discussing with all the founders and exchanging notes on what different organizations, different functions are doing, and it's always good to keep yourself abreast. So I always look forward to sessions like this, and hopefully, sharing my journey, I'll be able to share some perspectives on building Unicommerce. I just wanted to clarify, I've been with Unicommerce for nearly 10 years, leading it for the last 8 years now. And we were fortunate to take the business public, and this was one of the most subscribed IPOs of 2024. So while each organization's context is very different, I can definitely share some of the learnings, some of the things that have worked for us. But as I've always mentioned, all of you should take that with a pinch of salt, because each journey is very different. So the context, you're the best judge of your own context. So please treat with whatever I say or share about my journey. Please ensure that you're able to adapt that with your journey. I'll try my best to share whatever I can. Given that now we are publicly listed, there are also some restrictions on information that we can share on a public forum. But I'll try and answer any questions that there will be. Vinay, just as a clarification, so this is going to be free flowing, right? So anyone can ask any question. And
Yes, your comfort. If you want to take questions at the end, we can do it. Otherwise, we can keep it free flowing as well.
okay, great. I think the topic was about building a robust GTM strategy or getting to the first $1 million for early stage startups. Before I do that, I wanted to also get a sense of how many of you are already more than 1 million, or all of you are in the $0 to $1 million range, if I could.
Yes,
Yes,
we are
Kapil.
0 to 1 million range.
Okay, great.
0 to 1. Yeah.
Okay,
Most
great.
of the founders are in the 0 to 1.
Great. I think I'll again take examples from the Unicommerce journey. So the Unicommerce journey, like we have been around for almost 12 years now. The company got established in 2012. The journey of Unicommerce was largely in two phases. The first phase, where we were very focused on the SMEs. And before I talk about our journey, I'm not sure if all of you are even aware about what we do. We are an e-commerce enablement SaaS platform. So I hope all of you order online. So when you order online, right from the time the order is placed till the time the order is delivered to you, the entire backend is powered through the SaaS platform that we power. So if you look at the e-commerce value chain, typically there are three key layers. There is a customer engagement layer, which is essentially the website or the marketplace like Flipkart, Amazon, where you're placing the order. Then there is a transaction processing layer where we operate. And third is the order fulfillment layer, which is essentially players like delivery, shiprocket, etc., which are ensuring that the product is physically getting delivered to your doorstep. So when you order online, you see the website on which you place the order, and you see the delivery boy that's coming to your doorstep. Whatever happens in between is getting powered through our technology platform, which is now powering nearly 25% of India's e-commerce operations. We are processing nearly a billion transactions annually on our platform and have got many logos across many categories. So many digital first brands like Mama, both Sugar Cosmetics, as well as many traditional or offline first brands like TCNS, which has brands like W. Aurelia, Bestseller, Ginny and Johnny, Milton, and many others. And our solution is sector and scale agnostic. So we power many sectors like fashion, footwear, FMCG, pharma, etc., as well as any seller, any brand or seller, which is doing 500 orders a month to anybody doing 5 million orders a month. So we serve a small seller in Indore to a large enterprise like Lenskart or Mama. So that's the broad spectrum of our offerings. So now the context of our journey. So when we started out in 2012, e-commerce was just taking shape. There were handful of platforms like Flipkart, Snapdeal, and there was this unique problem, a problem that's very unique to India, which we stumbled upon, that a brand which has to grow has to sell on multiple channels, which is why I say that's unique to India, because if you look at US as an example, US is largely dominated by Amazon, and over the last few years, Shopify has also become a dominant platform. There are largely two platforms there, but if you look at India, in India, there have always been five or six dominant platforms. The names of players have changed. Earlier, let's say there was a Paytm, Shopclues, beyond Amazon and Flipkart, and today there are vertical players like Myntra, Jio, Meesho, etc. So the Indian e-commerce fabric has been that it has always been fragmented. And there are multiple channels. So that was a unique offering that we could bring. So one is this need is very specific to India, and that's why we are very unique as a SaaS company, that we are able to sell to Indian merchants. Because there's a popular myth that Indian businesses don't pay well. They don't prefer SaaS solutions. They take SaaS solutions in the garb of as a services offering. Thankfully, we've been able to break some of those myths and build a large business serving Indian customers. As I was saying in the beginning, the journey of Unicommerce should be viewed in two phases. The first phase was where the product was getting built out from 2012 to 2017, where largely it was about serving small businesses because e-commerce ecosystem was itself evolving. 2017 and like I said, I've been leading the business since last nearly 8 years. So 2017 is when I was given the mandate to lead the organization, and we pivoted to focus a lot more on enterprises, not just because enterprises pay a lot more money, but also because the fabric of Indian e-commerce was changing, where beyond smaller sellers, a lot of brands were also getting serious about e-commerce, because that's when the boom was happening, and that's when we started to evolve our product offering. Uh, so when we hit our first $1 million, which is what the focus of the session is, I think few things that have really worked for us is one, having this clarity of the problem statement that we're solving, and uh, two, for Indian merchants, it's very important that you're able to show the benefit almost immediately, because in emerging markets, at least what I've seen is the patience levels and the maturity of adopting technologies was slightly lower, at least when we were starting out. And that's why it is important to look at problem statement that give them immediate benefit. Uh, to give you a parallel example, in our space, in the supply chain space, I saw many startups coming in trying to solve for planning needs for many of these e-commerce brands. It is definitely a pain point, but a pain point that comes probably once in 3 months when they're planning their inventories, and a pain point that probably they're able to solve very well or good enough through Excel, let's say. So during that phase, I saw a lot of startups that started. They could not, like, they tried serving the Indian customers, but they were not willing to pay. So that was one thing that we felt that at that point of time, and now the landscape has changed massively, but at that point of time, what worked in our favor in hindsight is that we picked up a problem that they could see immediate value add, because one of the key pain points we solve is that as brands are selling on different platforms, we ensure that the same inventory levels are getting pushed on different platforms. So if a brand is selling on Amazon, Flipkart, and their own website, and if let's say they have 100 units of a particular SKU or a particular item, we push the same 100 on all platforms. And as and when an order comes on, let's say Flipkart, all the other platforms are updated that hey, the inventory is now 99. Now, doing this on a real-time basis manually is just impossible to do. So the brands or sellers could see an immediate value add. Initially, the adoption was largely with SMB sellers, but gradually then we pivoted to enterprise model. So I think for Indian customers, it is very important, at least in hindsight, what we feel is that this has to, the problem that you're trying to solve has to give a very immediate ROI that they can see themselves, rather than someone having to coach or guide them that hey, this is how you should calculate your ROI. The second thing, again, and by the way, a lot of it I also feel is like we were very fortunate that we figured this out at the right time. The problem we picked had a large opportunity size. Honestly, when this was getting started out, we like if back then if somebody would have said that e-commerce could be $100 billion market in our wildest dreams, we couldn't have imagined that. So in every such story, success story, there is a great deal of fortune of being at the right place at the right time. But these two things really worked for us, wherein we were able to one, identify a problem statement, and two, the iteration of product building, because we picked up SMEs, we did not have to customize a lot, and picked up a very platform approach, and we could build a very robust platform because this particular software became mission critical for them. And that's why focus on building a solid scalable tech is very important. And one good thing now we see is that has changed in Indian landscape is that now Indian businesses are willing to pay as long as they can see value. They are obviously value seekers. They have always been value seekers. If they can see value, they are willing to pay. And I know many SaaS companies today are making like $1 million contracts with Indian businesses, like not MNCs. Indian businesses are also getting there. So that's one thing. The second thing is in the new age Indian entrepreneur, Indian businesses, I'm also seeing welcome change of being open to using a platform and not having like I said, taking a services in the garb of a SaaS platform. They actually genuinely understand the value of taking a platform because they get the best practices of all the innovations that are happening. And today the Indian customer is a lot more savvy. So when we are today doing GTM in the market, there are uh, three level depth questions that are being asked when we are selling, particularly to an enterprise customer, which wasn't happening 5 years ago. So I think these are the three changes that we are doing. So when you are building your own GTM motion, it is very important that one, it is able to show immediate ROI. Two, focus a lot on the tech stack, the stability, best in class metrics, because while this is a harder route, but tends to give benefits in the long term. And third is uh, that uh, the business is a lot more tech savvy today. So be prepared for the next level of details as your next level of leaders, next level of team members uh, start taking the charge from you. Once you go beyond this $1 million, it will be very important that they are well equipped to handle and understand their technical abilities as well. I'll stop here. Happy to take any questions on this particular topic, and then also maybe you can let me know what any specific subtopics within the GTM or the first $1 million that you want me to cover.
Hi, Kapil. I'll go first. So I'm Ravi. I'm one of the founders of Apex Commerce. Apex Commerce is an e-commerce company that focuses on daily meal subscriptions. So we are like Shopify. We offer a storefront as well as an admin and a customer portal. My main question was around your initial few customers, right? Like how were you able to kind of show them the value? What kind of friction, arised out of deploying this solution to your customers? And at what scale did you kind of deploy your solution to the customer, so that they were comfortable that it's not disrupting their business, but also kind of give you a chance to see the value?
So in our case, like I said, our solution is unique in a way that it was able to demonstrate value immediately. So for us, honestly, discovery was a challenge for us to figure out the next first few set of customers to see who's selling online because data wasn't handy. But once we were able to identify a seller who's selling on multiple platforms, the ICP for us is any seller. And now we have two plans. The ICP for each of the plan is anybody who's selling, let's say, at least one order a day and is selling on multiple platforms. That's the ICP. So that's a fairly broad ICP for us, and it covers a broad spectrum because we are able to straddle our solutions across different segments. Different segments have different needs, and we've built our offerings accordingly. So when we were starting out, for us to look, the ICP was very clear because our solution made sense only if they are selling on multiple marketplaces. So at that time, that universe was very small, and we had to locate those sellers. So that way, we were fortunate that we were very clear on our ICP to begin with, but discovery of that seller that fit the bill on that ICP was very small. So to be honest, we started with a very small time because, like I said, nobody none of us had in the wildest dreams would have imagined that e-commerce could be $100 billion, and we are talking about a $300 billion market. And I have seen this recipe work very well. That when you're starting out, start small, start with a very focused approach, start with a very small time, and gradually start expanding your time. When we started to focus on SMB sellers. We took some contrarian bets that SMEs, we'd heard from many folks that SMBs in India don't pay, but that's the contrarian bet we took because we wanted to build out the product. Once the product was built out, then we started to gradually expand the time by adding offerings. So that's the bet we took. And the harder part we had to do was to locate in this very tiny time, locate the relevant users who could potentially use the product. Hope that answers your question.
Yeah, it does, Kapil. Thank you.
Manoj, you have a...
Yeah, hi Kapil. Just a bit of context about what you do, like how Unicorn is solving for multi-channel, say order management and inventory. One of the things we're trying to do is multi-channel accounting, right?
Okay.
We worked with a lot of CAs and software for CAs, and we have our own proprietary accounting system. But the challenge we see is that it's a lot, Tally creates a lot of manual data entry for accountants, and that prevents business owners from having real-time insight into their sales, collections, and etc. So in a
Manoj,
way,
your startup is called Tula. The product is called Tula.
yeah, Tula.
Okay.
Tula.India if you want to check it out.
And where are you based out of?
Hyderabad.
Okay.
Right. So
And how old is it? Because it's relevant to the space that we are operating in.
so we are about a year old.
Okay.
We recently started onboarding our first set of customers because accounting is general. Our customers now, we've taken like anybody who's willing to work with us, which are like startups, right?
Sure.
But the main kind of objective was to serve e-commerce players, and broadly speaking, anybody on say Amazon, Flipkart, Myntra, plus also maybe like Swiggy and Zomato, because there also F&B has gone multi-channel, right?
Understood.
So we've kind of figured out the technology where we can take any transaction from any system, convert it into a journal entry, right? So real-time accounting layer we've built. But the problem we're having is how do we reach out and show the value proposition to the business owners? Because one is automation solves for the accountant and not the business owner. Right? So that is where we introduced analytics, but we're still having difficulty in reaching out. So maybe from your experience, if you could tell us how, uh, what would be an efficient way to reach out to this ICP?
Sure. So if your ICP is e-commerce or F&B businesses or multi-channel, I think today, like when we were starting out, it was much harder. But today, there are ecosystem players like ourselves, and there are many e-commerce enablers and e-commerce ecosystem players. So partnerships is one route which can help. And I've seen a lot of startups in the e-commerce ecosystem which leverage partnerships very well to get get us, at least for scaling up, for the first few set of customers, it's largely through references, your own network, etc. But once you see that the product is working, and for the scaling up, I've seen partnerships work very well, as long as you can demonstrate immediate value. Because today there are middle layers, at least in e-commerce, middle layers that are existing today, which can also put this into Tally, and Tally is like fairly affordable for many of these businesses. So that you'll have to solve for. So they'll have to see what incremental value add versus not just Tally, but middleware plus Tally, which is able to do that. I was not clear whether you're becoming a replacement for Tally or you're becoming that another middleware for Tally.
No, we're aiming to be a replacement for Tally. Earlier, we did start as that middleware where we were trying to push transactions to Tally. But we realized one pain point we wanted to solve for business owners was this real-time insights into what's happening financially, at least. But then Tally doesn't have the right data structures to then extract and show it on a dashboard and things like that. So we thought that building a replacement would be a better option.
Sure. Sure. At least, and we do have a product that works with the finance professionals. So we have a reconciliation product, which is essentially helping them reconcile their payments. And honestly, like we've realized that for that product in particular, we don't need to reach out to the business owners. As long as the finance team is okay using it and the CFO gives a sign off, honestly, the business owner doesn't need to care because this is completely a department. So I'm not sure why you feel the need of going to the business owner. Reaching out to the CAs, accountants, or the CFO actually would be the right segment for you, unless you meant the CFO as the business owner here.
No, yeah, we look at accountants and then business owners. Like maybe we were looking at very small businesses who don't have a finance team. So that was kind
Yeah,
of.
for products like these, what at least I have seen work is that through accountants, it works really well. And discovering that again, partnerships is one model. You can set up a very small team. We started out by like a 1 or 2 member outbound team. Data is like easily available, which are relevant, which will be a relevant ICP for you. We can maybe discuss offline also some of the data sources that are available. And third is like SEO works really well. There are a lot of people looking out for solutions like these. So I have at least seen that beautifully work well in a space because now e-commerce is like fairly evolved. That's the ICP that you're going after. So the standard GTM motions actually work, and with very minimal investments, you can figure out sort of the 1 to 10 journey or even 0 to 1 journey.
Okay, great. I'll definitely connect with you offline.
Sure.
Yeah, thanks a lot.
Sulmeet had raised her hand.
Yeah, hi, Kapil. I'm the founder of AzoAI. Yeah, AzoAI is also in e-commerce enablement space, but it is pre-selling. So we have a cataloging solution from imaging to image processing to full catalog creation. And then the second part is ONDC onboarding, MSN seller app. So
Hmm.
it's like pre-selling. So the product is ready. We have been working with few mentors for GTM approach. So there are two contrary views. One
Hmm.
is going one by one, and
Hmm.
second is a one-to-many approach. And that we have been discussing with across the mentors and guides that which approach to take. Like one is like running maybe digital marketing campaigns, WhatsApp, going one by one. But since the TAM is very high, even if the
Hmm.
lead cost is low, because the focus, it's a mobile app in regional languages.
Okay.
So yeah, it's focused on small and micro segment. Like it can launch an ONDC store in 5 to 10 minutes.
Okay.
So yeah, so one like from my view, I'm more inclined to a one-to-many approach, but there's been suggestions on going one-to-one as well. So wanted your view on that. What ideally should we go for on the SME side?
So SME side, honestly, my recommendation is to go 1 to many. At least that had worked for us also when we were starting out. Even
Yeah.
when the time for us was very small, because 1 to 1, like typically the payout and depending on the product,
Mm-hmm.
the ACVs for you, the ACVs are high. Typically, ACVs on SMEs are far lower in India.
Mm-hmm.
That it ranges from let's say $50 to let's say like $50 to $100 ACV. But if your ACV is higher, then probably you can look at, so it'll be a function of your LTV, CAC, etc. This decision largely dependent on that one-to-one, one-on-one, or one-to-many.
Mm-hmm.
One-to-one is definitely productive in terms of outcomes, but
Yeah.
it is financially can be draining. So it is a function of if that equation would have to make sense, because if, let's say, maybe the ACV is smaller, but the customer, when he comes on your product and sticks for long, which is the case with us, our LTVs are far higher, and
Yeah.
hence we can afford to spend a lot more on the CAC, and we can do the one-to-one approach. But if in your case, if the lifetime value is not very high, then in that case, I would recommend that one-to-many is a lot better. And in SME, typically in India, I've seen one-to-many works reasonably well if done well. So you have to be efficient there. If done well, one-to-many
Yeah.
works reasonably well in the SMB segment.
Got it. Got it. But this is helpful. Thank you.
Yeah, Saurabh.
Yeah, hi, Kapil. Uh, so basically, we provide a SDK solution, a software development kit to integrate in-app audio video calling, primarily for customer engagements, primarily all touch points, pre-sale, sales, support, and service, as a replacement to the existing telephone-based communication channels like this IVR systems and all. So it's a replacement to them. So in-app, all kind of stuff like being authentication, OTP authentication and all, you can do basically in-app. And like calling, let's say you book a Uber app now, and the driver call now happens in-app, right? No more phone calls. So very similar. And we're trying to focus on ICP of BFSI and automotive as a segment to so primarily the use case in automotive is to enable online demos of vehicles directly from website,
Okay.
primarily video demos, and that as a first round of communication channel, because nowadays if you fill up the forms, then call getting back is an issue because of the spam
Yeah.
things. So, and the BFSI is primarily is now issue because of the whole spam threat, mobile number impersonation and all things happen. So what I'm proposing as a value is that why don't you integrate the whole communication channel inside your app rather than running it on the whole telephony layer. So here, I'm thinking when on the ICP that if we now approach the large enterprises for, let's say, banks and all, then they're like, it takes time and effort and to crack them. But getting a value proposition that run your communication system on something like this to SME, that's where we're finding the right kind of communication messages, that how to communicate it to them, that you adopt this maybe a little bit before time, or what do you think based on your
So I have limited experience on BFSI, but at least what I've heard is typically they are very, very averse or for change. Like security is very, very, data security is absolutely important. So they would rather prefer a large vendor which is well established rather than taking a nimble. So speed is not a priority for them.
okay
Adapting to change is not a priority. That's what I've heard. And some in couple of SaaS startups that I know who are operating the BFSI segment, the approach that worked is, while I understand like SMEs, identifying SMEs and the value prop for them will be significantly lower. But the entry point at least has been not through SME, maybe mid markets to smaller banks who are a lot new age, a lot more enterprising. Once you're able to build some of the case studies there, I think that's when the larger banks also start trusting you. That's the GTM motion that I've seen. But again, I'm not an expert in this domain, but at least that I've seen work really well. Automotive, I've seen a lot more welcoming. So maybe that could be a segment that you could go after. It's relatively easier to crack, but the time, like the client base is fairly limited. So here, there, a one-on-one reach out, you can actually demonstrate value add, do pilots with them and demonstrate value add, and then incrementally build it for the BFSI segment is what I would fit. But your would be largely a mid-market / enterprise motion, which is going to be very heavily focused on outbound, making sure you're sitting across the table, demonstrating value to them. And some of those initial wins would largely get through either your own network or find out people who are very well connected, maybe incentivize them through cash or equity, and then help them, use them to open the doors, and then show value to them. At least a couple of friends that I know who worked in automotive and BFSI, that has really worked for these friends from a GTM motion perspective. Opening doors is extremely important there. It's a very, very small community. And once you're able to do one or two, and if those are very positive, the word spreads around. But cracking the first one or two good deals is very, very important. And there, don't try and optimize, because that investment is going to yield, it's going to be very, very high ROI, assuming your product is able to deliver value. So don't try and shortchange or optimize your initial investments in folks who are going to open the doors for you.
Okay, with some initial investments, correct?
Of course, that goes without saying. Yeah.
Okay, understood. And the second question is that, do you think any other segment that we should focus as our ICP? Because let's say
I'll need to understand the product a lot more in detail. So maybe I can connect offline with you, and I can understand the ICP. I can understand the use case that you're trying to solve, and then maybe brainstorm together on the ICP.
Sure. I'll connect. Sure. Thank you very much. Thank you.
Yeah, Preeti.
Hi, Kapil. This is Preeti. I'm from ERPZ company. We are doing like a manufacturing management SaaS software, which is more like ERP plus MES together. So my question was like that you said that you started really, really small, like 1 to 2 people. So like first part of the question was like, at what point did you include that sales team into your plan? And the second part was like, how was your approach for this 1 to 10 client? Like, what were your main priorities on that front?
Sure. Before I answer that, Preeti, can you help me understand what this ERP specific to any particular category? This is category agnostic.
So no. So this is manufacturing in general. So we are not trying to create any niche over there, but manufacturing sector is what we are targeting.
Okay. So then you're essentially competing with the larger ones also, like the SAPs and Oracles of the world as well.
Yes.
Okay.
Correct.
And in what ways is it different from the larger ERPs?
So what are we trying to do is that include AI and IoT integration as part of this. And so one major thing is like the extremely like the bigger enterprises, they are like extremely expensive. So the cost range, so we are trying to be in midway in terms of AI and IoT integration, and also be that cost effective. So even the small and medium enterprises can also be able to have those ERPs and MES, those automations basically.
Okay. And today this is pre-revenue. Do you have paying customers already?
We have a paid pilot going on at the moment.
Okay. And typically, what's the ideal scale for you from a customer perspective? Like from a customer scale perspective, is it like a sub 100 crore company, 100 to 500 crore turnover?
Yes. So basically, now what we are doing is like after attending T-Hub sessions, now we have like we want to start with micro, small, and then slowly go to medium and large enterprises. So yeah, below 50 crore is what we are starting initially, but then slowly go 50 to 100.
Sure. So I think the first, and this is dependent on the founder's DNA as well. So if the founder is like has a strength on the sales side, I would recommend the first, let's say 5, 10 to 15 customers should be done by the founder. That's when you get the sales hire after that. But if that's not the strength, then I will again recommend not underinvest in that. In SaaS, while the tech and product is extremely important, but I feel that we undervalue the sales talent and the importance of the sales folks. I've seen it, getting the right salesperson, and it doesn't need to be a very senior, fancy guy. Getting the right hustler at the initial stages can do wonders to any company, because if the founder is not like, if the founder is very tech and product centric, then the person, either the founder has to fill that, another co-founder has to fill that gap, or get the first level early on, like even with the first sale itself, because it requires a very different skill set. You need to be very, very shameless. You have to keep your ego aside. You have to be able to communicate, build a relationship, build a rapport with the customer. So that's extremely important. So that the timing of when to build the sales team is very dependent on the founding team. But hope that answers your question. And what was the second part of your question?
Second part of the question was like for you, 1 to 10 customer, like what was your approach? Like what were your main GTM points for going from 1 to 10?
So for us, like thankfully we had the skill sets for us to do the reach outs. So one of the founders took the sort of charge of reaching out to the customers. Like I said, for us the time was extremely small. So for us it was discovery through partnerships, from let's say reaching out to marketplaces to figure out who are the sellers, etc., and discovering them, figuring out their contact details, reaching out to them, and then go and meet them. Even though these were SMB customers, because this was very early stage, like early phase e-commerce wasn't evolved. So we did a lot of physical meetings with these small businesses to understand the pain point, build the product accordingly. So for us, it was a challenge was a lot about discovering who the right people are selling on multiple platforms. And that we figured out through partnerships, etc. And after that, a lot of our GTM motion was actually sitting in their offices, deploying the product, seeing, because like our product thankfully was giving them instant gratification, so we could see solve their teething challenges. After we got confidence with the first 3 or 4 deployments, that is when we started to scale up, go to the 10 deployments. So we have, and that's our culture. Again, it's very founder driven, but our culture is to grow slowly and steadily. We've never been a very high growth company. We've never delivered 100% plus growth, which is what a lot of venture backed companies do. We've always believed in like I'm a firm believer of compounding. So and as a DNA, we always believe in leaving deals that we cannot deliver. So we always undercommit and over deliver in terms of our deliveries. So in the beginning phase also, we first wanted to make sure that the first couple of deployments made sense. Sellers were seeing value, and then we started to scale up by again discovering those, going and meeting those. And over time, we realized that word of mouth was very positive. E-commerce is a very connected ecosystem. So the positive word of mouth spreads very fast, and we did not have to invest a lot on our sales side in the initial year, because we got a very, very positive word of mouth. We were a very unique solution solving a very unique problem. So the first mover advantage also helped in our case. So that was our context. So the choice in your case, given that you're going after the SMEs, but this is the problem that you're trying to solve will take longer to demonstrate our results, because ERP fundamentally is when they're trying to streamline their processes. So for that, you also have to discover businesses which have the mindset or the maturity to understand that this is the right time for them to implement the ERP. So you have to very carefully choose the right set of customers, because if the customers don't appreciate the potential value add that this can give, they can take you in any direction. Because so that you have to be very careful. So my advice to you would be is to go slow, get the first few right, and then take it forward. But obviously, it's a function of the capital needs that you have, your business has, etc. But in general, that's the approach that has worked for us for Unicommerce.
Thank you so much.
Hey, hi Kapil. This is Sriharsha from Scribo. So we are a feedback platform where we help businesses to collect, store, and analyze the feedback with the help of OpenAI. So currently, initially we focused narrowed down approach and focused on restaurants in the Hyderabad area. But our ICP is people who are just focusing on consumer experience, and people who are selling services to the consumers and focusing on feedback and correcting them. That's what our ICP is. So with restaurants, it is taking a lot of time for us to convert, because Horeca, I know it's very tough thing to crack. Apart from that, we are also planning to concentrate on saloons, and we recently pitched our solution to Hyderabad Airport, to the GMR group, and they are pretty much interested in us, but it is also taking a lot of time. So I need some advice related to this one.
Yeah, I think very interesting value proposition, and you're right that this is relevant for a lot of businesses. But my advice is that while when you're starting out, there's always this temptation that you go after 10 different ICPs and hoping that one of them will work, and in 99% cases, none of them work. You'll have to build your conviction on a particular segment, go after it. Like it will be hard for sure, but and that's where your conviction will play out. Because if it was easy, then in India, the kind of setup we are, you will have 10 other competitors at that time, because easy opportunities are the first ones to be that everyone goes after. So you'll have to pick a segment which is hard, but you bring in the context or some advantage wherein you can crack that segment. So I think what I've really seen is go with a very, very narrow time to begin with. That approach has worked, and that's a recipe that I feel has worked across many businesses. Go with a very, very narrow time to begin with, and gradually look at expanding time. If you go with a very large time to begin with, then in like I said, 99% cases it doesn't really work. So pick a segment where you have a strong conviction, and it may not work for 3 months, 6 months. Like define a time frame, and if it doesn't work, then go after the other segment. If you go after multiple segments at the same time, um, the typically it leads to a lack of focus. Product goes in multiple directions, and then nothing works out. Obviously, the approach that I'm saying, there's a lot of risk there, and that's where your research, your conviction will go a long way in is finding the right space. But spend a lot of time there, and then go after a segment, and then fully commit to it, and then leave out all the other distractions, because it's very easy to get distracted at this stage.
Sure, Kapil. Yeah.
Right. Any other questions or any other topic, Vinay, that you wanted me to cover in this particular?
Yeah. So Kapil, I think you have touched upon scaling quickly to the first $1 million ARR, right? It would be really great if you can give a rough timeline on what's the time that it took for Unicommerce to reach the first million ARR, and maybe the next 10 and further on, just to have a relative understanding for all of us out here on what is the ideal or realistic time that we should keep in our mind after we start the GTM motion to scale up to the first million ARR, and what's the importance of that first year, which is very crucial in terms of revenue for the startups.
Sure. See, the timeline is very, very subjective. Like every journey is very different. I've seen startups scale to their first million in 1 year, and it has taken many years. For us, like that journey was nearly about 4 to 5 years, where we hit our first $1 million. And like I said, we've always been a very steady growth business. We've always believed in building the business profitably, and we've been profitable for many years. So that's a choice that a founder takes depending on the capital needs, the market that you're operating in, how competitive it is, etc. But there is no thumb rule. Each track is very different. Each business is very different. So don't fret if your first $1 million is taking 8 years. It is a function of your conviction. But the broad guidance or broad milestones that I would like to keep it is one, the first year has to be about chiseling your ICP. I think most founders don't consider this very important, and now the next breed of entrepreneurs is very, very evolved and a lot more informed than we were when we started out. But the first initial few months of the first year has to be about chiseling the ICP, take feedback, build thesis, get those theses validated. But you have to be very clear of the segment that you're going after and the value that you're adding in that segment. That clarity in your head is extremely important, because that will reflect in your communication to the customers. Because if that clarity is not there in your head, you're trying multiple directions, you will come across as extremely confused when you're going to the customers. And whether we like it or not, it just this lack of clarity in our head invariably translates into our communication with our customers, with our team. And then we become like sort of a services business. Like revenue comes our way, like let's prioritize revenue. Don't look at the quality of the revenue. But that results in a lot of negative outcomes in the long term. So that try and avoid if you can. Again, it's subject to your capital needs, the runway that you have in the business, etc. But the longer you're able to spend in chiseling out your ICP and being very clear on the value proposition that you have, that will solve and build a very strong foundation for you to get to the $1 million quickly. We took a lot of time figuring this out, and I think and discovering the market, etc. And that's why it has taken longer. But today, the speed at which solutions are getting built, the speed at which it can be sold, the speed at which customers are discovering solutions, the time frame can be much smaller. But it's very important that the founder is building this with a lot of clarity. Otherwise, it can take many years also to get to the $1 million.
Kapil, one more thing that we really wanted you to touch upon, which is outside GTM, but which is very much important, is the culture aspect, right? So all of us, all the founders, all the startups would eventually go ahead from now in a couple of quarters, would get the first 3 team members, first 5 team members, and eventually more from there. What is that as a founder, and why is culture very important, and what is that as a founder that you will have to really take care of, not just as a HR function, but culture coming from the top as a founder, and the importance of it in the long run?
Yeah. No, I think that's extremely important. It's a very relevant topic that Ganesh you brought up. Culture is not driven by the HR. Culture is driven by the founder. The founder's DNA, the founder's nature drives the culture within the organization. I think before I touch upon the culture aspect, I think it's very important that the first set of team members that you're getting in, make sure that you're getting in. So with co-founders, I think it's everyone says that you should get co-founders which are with complementary skill set. I think with the team members also, it's extremely important that they're identifying those skill sets, identifying the gaps that are there in the founders that the team members are trying to fill in. Like I said, if the founder is not very comfortable with sales, is not a great sales guy, get a rockstar salesperson who's filling that gap. If the founders are not driven with customer success, get a rockstar person who can drive customer success. And again, by rockstar, I don't mean that somebody who's done it taken the company $10 million and is a rockstar charging top dollars. You just need to get a good hustler who's able to drive this. So be very clinical and very objective in your own assessment as a founder or with your co-founders, that these are the gaps that we see if you have to scale up, and try and fill those gaps. If that allocation of responsibility is clear, which is like the culture issues kind of get taken care of on their own. Culture, as I said, is a function of the founders. Aggression, humility, all of that are tenets of the culture, a lot driven by how the founder behaves with the team, how the founder is as a personality. And in a smaller setup, let's say with the first few members, I've seen collaboration not being that big a challenge. But as we scale up, the cultural aspects will tend to play a lot more role, where you have to drive collaboration. You have to make sure that all the team members are going after a common goal. But here, it's extremely important that you're filling in gaps in terms of the skill sets, and make sure that you're building a culture of transparency, because transparency drives a lot of accountability. If the team feels, the next level team feels that the founders are taking important decisions amongst themselves, they're not consulting or not sharing enough information, it tends to switch off the initial few team members. So initial years, it's very important to build a culture of transparency, and accountability comes in. And in this team, if you feel at any point of time that a person is not working out, you're already 6 months late into the decision. So be very clinical in terms of figuring out that you're getting the right people. And all of us we're all human beings. All of us make mistakes in hiring people, because people who give great interviews may not always be great assets to your team. So be very thoughtful and make sure that if at all it's not working out, don't delay that decision making. It's extremely important in the initial set of hires. If not, that person is not working out, be very, very clinical, because you're doing yourself, like you will do a favor to that person and yourself by having those hard conversations. So it's very extremely important So one is the culture of transparency. Two is the comfort of doing hard conversations with your co-founders, with the first set of team members. I think the rest of the things are taken care of on their own, at least in the initial setup. The rest of the culture challenges start coming up when you start scaling up in the 1 to 10 and the 10 to 100 journey.
All right, thank you so much, Kapil. And one last question from my end before I hand it over to Vinay. How's life been post IPO? How hectic has it become post IPO?
We were a unique company. We were bootstrapped largely. So I'm not sure if all of you are aware. The company got acquired by Snapdeal in 2015, but we've always operated independently and like we were financially independent, operationally independent. So we've never post acquisition, we've never raised money, and we've straight away went public. So this is the first time the team is also having to deal with the investors. So it's an interesting journey. There are a lot of new learnings for us on figuring out how to manage the public, like how to deal and make sure that we are very clear and crisp in our communication. So managing customers is one thing, communication with the customer. Similar skill sets have to be built to sort of engage with the investors as well. So that's a muscle that we're trying to build. It's because it's in initial phase for us. It's a very new story. Companies at this scale sort of solving. You don't see a lot of SaaS companies listed in the Indian public markets. So a lot of our time is right now going about evangelizing the overall space and helping the public market investor understand about business model, what we do, etc. So right now it's extremely hectic. Today typically nearly a month out of a quarter is getting spent in these activities. We have to do quarterly earnings call, engage with the investors, etc. So essentially the work that we used to do in 3 months now is getting crunched in 2 months. But like I said, it's a very interesting experience. And what we are very excited about is hopefully it also open the floodgates for a lot of SaaS companies to get listed on the public markets, because as the public market ecosystem matures, I think they'll be a lot more evolved and a lot more welcoming up with the new age SaaS companies, because fundamentally SaaS is a higher margin business, and globally we've seen SaaS businesses deliver a lot of profitability. So fundamentally, I think SaaS businesses are more amenable and more aligned to what the public market investors are looking at. So hopefully this journey will inspire a lot of entrepreneurs, and hopefully many of you in few years we'll see you getting listed on the public markets.
I have a question, if I could ask. You said that you were primarily bootstrapped, right? So did you uh, did you find any challenges there going from being bootstrapped? At what point did you decide did you go for investment, or did you directly get acquired? Like, what was that journey going from being bootstrapped to, and how did things change for you at that point?
So, see, before getting acquired, the company had raised some money. So we were funded by Nexus. So at that time, like I said, the SMB market was fairly new. So that time investments were required for us to scale the business. And given that we were potentially looking at a very limited time at that point of time, I think it sort of at that point of time, and Snapdeal was one of our largest customers. It made sense at that point of time. But post the acquisition, Snapdeal post 2017 had a different journey of them. 2017, when sort of we decided to, and the market landscape was changing, we felt that there was a need that was evolving of a lot of enterprise brands which were looking for a solution like this. At that point of time, I think we had taken a call, and this was our context, that we wanted to run this business profitably. We did not want to raise again. That was a call that was relevant for our context, may not be relevant for all. But once we took that call, we built our business on that fundamentals, that we started measuring metrics on the things that I was saying, LTV, CAC, our investments on sales and marketing. They had to sort of have a payback period of much smaller, let's say about a year and a half. Things like those we started to do. And so then, because we had defined that constraint for ourselves, our execution started to get driven by those, and that's how we incrementally started to build. So if you look at our historical performance, we probably are ranging between a 30 to 50% revenue growth rate, and that sort of was the choice that we made for ourselves.
So basically, I'm saying throughout your journey from beginning to later, you focused on profitability to a significant aspect, so that you were not going through multiple rounds of investment and things like that.
Yeah. And I personally feel that in SaaS, it's a lot easier to be able to take that path versus a B2C company, and that's why we thought that, and that's why we took that call of defining that constraint that whatever we build from here on will be built profitably.
In terms of the investor that you went with, was it primarily a cash infusion, or did you look for somebody who could also connect you, or was there any other thing that you were looking for when you went for an investor?
So at that point of time, like I said, the core business, the time was much smaller. So at that time, it was more a strategic acquisition. But post 2017, it was about. So
Sure.
after that has been operationally independent. We have not taken any help from our
Yes.
friend. But yeah, at that point, it was more a strategic acquisition.
Got it. Sure. Thank you.
Great, Kapil. Thanks a lot for your time. Kapil, before we wind up, I quickly want you to kind of touch upon the vertical AI agents versus the SaaS thing. If you have any thoughts on that, would be nice to hear it from you, and then we can wind this session up.
Yeah. So I think AI is everywhere now. It's in our in e-commerce world, omni-channel was a very over-abused word where it was getting thrown everywhere. We have seen AI, the impact of AI a lot more on the support in the marketing spaces a lot more. In our space, we are beginning to see some use cases of AI. So I'm not an expert on AI yet because there is still a lot more that needs to be done. The problem statements that the brands and the ICP that we are going after are solving are still trying to figure out ways to optimize their supply chain. But what we are seeing is that as the scale of e-commerce is increasing, there are a lot of use cases, small use cases that are getting powered through AI and getting solved through AI a lot faster. One, the building has become building solutions has become a lot faster. Two, the cost of handling those. So today, let's say a customer is willing to pay an X amount because you are building out a solution. That expectation has gone from X to X by 3 because today it's available a lot cheaper thanks to AI. But that's the level of exposure that I have to AI today. So that's pretty much I can talk about it as of now.
Cool. Great, Kapil. Thanks a lot for that thought. So with that, we come to a conclusion for today's session. It's been a great 1 hour hearing you speak and of course interacting with our founders. We request you to be in touch with us. We'll keep you posted on the updates. And of course, some of our founders have some questions beyond this session as well. So we'll get in touch with you to help us solve those questions as well. So with that, once again, thanks a lot for your time and have a good evening. Thank you.
It was a pleasure interacting with all of you. All the best, and hopefully, hopefully I'll get to see many of you on the public markets in the next few years. All the best in building your business. Thank you.
Thank you so much, Kapil.
Thank you.
Thank you so much.
Kapil.
Thank you, Apoorv. Bye-bye.
Thanks, Apoorv.
To all founders.
Thank you.